Welcome to another episode of the Power Law Investor. Today is March 30th, 2025, and we'll be talking about Bitcoin and the global M2 money supply and why things may not be as easy and as smooth as they seem. So we should be careful, but also cautiously optimistic. So as I'm making this video, the price of Bitcoin is just below $83,500 and Casper is trading at 6.5 cents. Now, as always, this is not financial advice, but do your own research, all right? And this for informational purposes. So let's continue from where we were last week, right? And this is some of the work that Colin had put out. Shout out to Colin. I'll leave a link to his video out there. And basically, the idea is if you take the global money supply, M2, which is represented by this yellow line over here, looking at that and going back about 75, 108 days or so, we find that there is a great overlap with the Bitcoin price. So I'm taking this now moving it forward so that I'm looking at the price 3 months in the past, 3.5 months in the past, and I find that it overlaps with the price of Bitcoin today, which we just said is about $83,500. It overlaps really well, right? And we can change the shape of this a little bit and find that, hey, there's a really nice correlation here, right? And that gets us really excited because there's a correlation and the money supply is heading upwards, which means the price should be going upwards. And we have the math to back that up over here, right? Thanks to Colin again for sharing the original code for the money supply. And then this is the correlation, some of the stuff. He built something similar, and I've built my own version over here, is that it looks at 30 days, 60 days, and 90 days. So if you take the two streams of data, you align them by 108 days offset, and you overlay them on each other, you find that if you look at 90 days of data, you have an 83% correlation, or 60 days of data, you have an 81% correlation. So that means that prediction value is doing really good. They're moving about the same way, right? And again, this is exciting because if we know what the Bitcoin, or we know what the money supply has done, then we know what the Bitcoin price is going to be doing, and the money supply has gone up, so the Bitcoin price should be going up, and everything kicks off around May the 1st, right? That's the story. And my interpretation here is yes, but let's be a little bit cautious because to me, in my opinion, I'm not sure if the data is going to show exactly that we can call the timing exactly right. But I do think that we are going to experience a burst of prices. I'm just more uncertain on the timing than what seems to be the general narrative over here. And I'll give you a little bit of my narrative here. And then we can discuss this. And so please write in the comments what you think, right? So the first caveat here is that the 90-day correlation is great. The 60-day correlation is great. The 30-day correlation isn't so good, okay? So unless I've done my math wrong over here, and I think Colin had similar numbers around 20%, what that means is if you take if you offset and then take a 90-day chunk of data, it looks really good. They overlap. You take a 60-day chunk of data, like looks really good. And then you take a 30-day chunk of data, it doesn't look so good. The correlation is 17%, 20%. And the 30-day chunk of data is right from the end, right? The current position. So 30 days going back from the current position. And that means the correlation there has declined significantly. So if it's declined in the last 30 days, what does it mean for the next 30 days coming through? And the next 60 days and the next 90 days coming through. And that's what really we're interested in because we want to not only know, hey, prices are going to shoot up, but I want to know when prices are going to shoot up. So I just catch the bottom and hit the big time, right? And so the math is telling us the correlation is only 17% or 20%. So in my opinion, it looks like the correlation is going down. And that's visually really hard to reconcile that you're telling me that it's all this way up to here is 80%, but just the last 30 days, and it looks like it's following pretty well, is only 17%. And yeah, this could be a mathematical issue. You have to dig into how correlations are works. But basically, they're looking at those two prices or those two streams of data, the M2 and the B2 moving in lockstep, right? And according to the math, you look at it, it says, but it's overlapping. Yeah, but the correlation is not as good as it was over the last 60 days and 90 days, right? Now, let me be clear in saying that just because mathematically we calculated a particular way does not mean that they don't follow the same general tendency, right? And it really looks visually like that's what's happening. My point is that if you're just relying on the math, you may not, we may not be seeing the same degree of correlation as we would be expecting or as we saw for the last 60 and 90 days. So let's be cautious in understanding that maybe they're just moving off in lockstep and it's a statistical artifact that they're really moving close together, but the correlation has dropped down. And that's why generally you want much longer periods of time to have correlations, right? So you're looking at 120 days, 150 days. That's great because the more data you have, the more data points you can connect with each other and see if they're moving in lockstep. So that's really the counter argument over there. Like, oh, this could just be some noise that you're seeing that's throwing things off. My caveat is let's just be a little cautious, right? Because if things were beginning to slip away and they were beginning to decorrelate, this might what be what it looks like, right? So let's be a little cautious about that. So the argument here is we are beginning to see a breakdown in the correlation over the last 30 days, even though visually it looks like things are on track. Let's be cautious and see what happens in the next 60 days. And let's not make any huge financial decisions expecting things are really going to take off on the end of April, beginning of May. Okay, so that's the first one. But if you take that into account, we do know in general, as the M2 goes up, the price of Bitcoin goes up. In fact, that's what I talked about in my last video over here. And this is just some fancy math over here, or not that fancy really, but I'm using a log fit is what I've done. I've taken logarithms of both the M2 and the Bitcoin price and fitted them with a straight line through it. And we do that because of the big change in the price of Bitcoin over time. So we want to try and incorporate the different orders of magnitude that we've gone through and have things be balanced in the best mathematically rigorous way. But it does give us this R squared that says 86% of the variation in the Bitcoin price was explained by the M2 price, or rather the change in the M2 price, because these are daily returns, just to be a little more technical on that. And what that means, what that mumbo jumbo means, mathematical mumbo jumbo means that we can draw a line, a curved line, a mathematically defined curved line that tells us what the price of Bitcoin should be for a given M2. And now, as you can see, the price, the value of M2 here on this left-hand axis over here is 109. So if we look at our handy dandy chart over here, that's probably about 150K, 145K. Now, the caveat here is that we've got these broad standard deviations. And what that means is that we're just not that sure. This is where I think the puck is going to be, but I'm really not sure what. There's a big error, margin of error on either side. But on average, you do have a really strong tendency for the Bitcoin price to follow the M2 price. And so now let's talk about what the second and third order effects are, right? Because I want to leave you guys with something useful to think about, something that might impact your financial policy or financial decisions going forward, and how I think the way to play this might be. When I'm looking at this and I'm looking at the math is telling me that the correlation is breaking down. The visual is saying it still looks pretty damn good, right? And so there's a really solid chance that that around March 1st we do have a kickoff, right? So the flip side of that is what if we don't have that particular kickoff and the correlation breaks down? At that time, the narrative is going to break, and likely a whole bunch of people who were expecting the price to go up sell because it's not moving around that time, right? Oh, it's a big dart. It's really not following the M2 money supply. So in that case, we might end up with some fantastic buying opportunities, particularly because we know across the long run that we do have the price of Bitcoin following the M2. And sooner or later, I'm not confident about the timing that it's going to happen exactly around here, but I knew it was going to happen sooner or later, right? And so my best bet, because I don't know exactly when it's going to take off, because that's what the math is telling me over here, is that I'm going to DCA in. And the more it drops, the more I'm going to buy. Because I know, and this is the great thing that Colin talks about, right? That this big pulse of money supply, that is going to move the price sooner or later. That's my addition here. So I'm not so sure on the timing, but I'd like to cover my bases, so I'm going to DCA in regularly, right? And so now, if you're having a little bit of a drop here, maybe we'll get the price to drop down. That's going to be a good time to increase the amount of DCA going in. And maybe around this time, we're going to find increased volatility, and maybe the price drops down even more because it hasn't kicked up, right? But because lots of people are expecting the timing. But we know that sooner or later it is going to go up because that's a strong relationship over the entire history, not over the last 30 days, not over the last 60 days, but over the last 15 years of data that we have. And we don't know exactly how much the price is going to go up by. Maybe it doesn't go up all the way to 160. Most likely it doesn't because a lot of these dots in the scatter plot seems to be below the orange line. But we could expect an increase in price. And so that leads to that second and third order effect is, hey, if there's a change in the crash in the price, the narrative is going to be broken. A lot of people are going to be dismayed. That's going to be a fantastic buying opportunity, right? Because we know the price is going up. Maybe it takes a month longer. Maybe it's the beginning of June instead. So that's one correlation. Oh, that's one second order way to think about it. The third order ray effect is to realize how much it's going to impact the altcoin market. Because like it or not, the altcoin market follows Bitcoin. So if Bitcoin has a drop, the alts are going to drop even more, which may be a fantastic opportunity for those of us who are into the altcoin market. And so Caspa is one of the coins that we talk about on this channel, and that we might get some fantastic bargains to pick that up. Because we know the price of Bitcoin will go up, we're also expecting the price of the alts will go up also, but probably by some much larger factor, it's going to be amplified because the alts move much faster than Bitcoin when push comes to shove. Personally, I don't think alt season is here until quantitative tightening ends and quantitative easing begins. But that's a hard one to call, and I'm not an expert on the macro view, but it might happen with the Fed meeting, which might coincide with what's happening in this M2 money supply growth. So, what are the takeaways over here? The takeaways I'd like to leave you here is let's be a little bit cautious about the March 1st liftoff time. Visually, it looks like things are on track, but the math is saying things aren't quite so on track. So, let's be a little bit cautious. Have a strategy if it doesn't take off by the end of April. Maybe it takes off in June or July. But we do know because we've looked at this data over the entire history that the price is going to take off sooner or later. All right. And because of that, we may get some great buying opportunities, not just in Bitcoin, but also on altcoins and other aspects that are related to crypto, even stocks, crypto stocks. So just wanted to leave you guys with that. Hope that's useful and hope this is a different perspective and adds a little bit more nuance, some more color to the situation. Please like and subscribe and support the channel by sharing. And looking forward to hearing your comments below. Cheers.